Hi, let's talk about this ECOM. It turns out that James' reading was correct. It's not good. But I want to explain to you why do I feel this looked good yesterday. Because when you look at yesterday, this is a big doji here, and you have this pretty good left-right engulfing. So bullish engulfing, then go up and break out of the T line. So this is pretty promising, but this one is evening star, so it's not that as good. Now, if you keep looking here, actually, this is a doji sandwich. That's why I get bullish, and I see that it's using a doji sandwich get out of the uh, trigger line, which is the T line. So I was optimistic. But in the meantime, I was not entirely decide myself. Actually, to be honest with you, when this is open above this doji, I decide this is following the doji rule. It's going higher, so I bought a little like 60 share here. Then I post that to you guys to ask you why do I think it's good. That's why I think it's good. But actually, yesterday, the day that this was yesterday, right? So the yesterday actually ended up to be a doji. So James was right. He said this look a little, it's not so promising, but still I'm holding on my hope. I say if today is open up higher, then we may see the repetition of this. There's a good chance to go higher. So in fact, today when this is going higher, then I start to follow my teacher's uh, suggestions. It's just looking at the 5 minute, 10 minutes chart to see that once it start going lower, I buy it. So somewhere here, I think I add another, let's say 30 shares. I totally have 90 shares. But unfortunately, it bounced up a little bit, then start to go lower. So it's keep going lower and lower. As soon as it go below this, a little bit more, then I close 30 share and watching it to see whether this will bounce off this three MA line. This end up to be now is much lower now. So after this go below that for some time, based on this 5 minute chart, I just decided to get completed out. So with this particular trade of this ECOM, I look at my record, I actually only lost $19. So what's the lesson from here? The lesson from here is that when you see a chart, you feel that you're comfortable, this is to be good, you can try with a small amount, then start to follow through it. Then when it doesn't go out well, then you get out, so you don't lose much. But you never know. Let's say today actually it did not go down here, then this keep going higher, I'm making money, I'm making good money. So that's the idea. Another point before I go away, I want to talk about that is even now, it's still a possibility I get out too early, but that's fine. I'm fine with that because today has not ended. Remember, we talked about the candlestick. If we are looking at the daily chart, then this entirely is a possibility. Is go back down here, then go back up here. Okay. Let's say if you look at an example like this. Okay, this is open higher, then open here, then go higher, then drop, but eventually go back. But I cannot make that a case to support this because this one actually open lower and close higher. It doesn't. So this one is open higher, start to go lower. So actually this is our different. So this is the example I like to show you so that you have some idea what how to deal with a stock chart and figure out something to make a more detailed decision. So this is what I want to show you. This is, if you look at the 5 day, 5 minute chart. Okay, this area is the overnight. So actually overnight is here. So when it's open, it really looks good, right? So it start to drop. So I think what I did is when I forgot where somewhere here probably start to bounce back. Then I just decide to to go back in, to add another 30 share. Let me look at my time frame. The time frame I actually buy it is 643. 643 somewhere here. So actually, if I go with a 5-minute chart, I probably should not even go in there. Okay, so, but I guess at that point, somehow the chart convinced me it's worth to get back in. I get back in. So that was another good decision. But I think the good decision is that when it crossed below the middle of today's, actually yesterday the middle, then I just decided to go out a little bit. Then when it crossed, let's go back to the longer period of time. Let's go back to daily chart. So my decision was that when this go below this, allow this go just a little bit more, because you don't want to go exactly when the point, the level, because that's where the big trader is trying to force you out. I allow it to go a little bit more. I close 1/3 of this. Then my next goal is looking at this 3 EMA. Then when it breaks the 3 EMA a little bit lower, I break below. What happened is that yesterday, apparently, I get in a better price. Therefore, the whole thing get together only lost $19. Okay, I hope this actually give you some idea how to deal with stock. In the meantime, let's look at one other chart to get some idea. Okay, let's look at how do we want to do? Let's do Nasdaq. Let me find the Nasdaq. Actually, let's do QQQ. Okay. QQQ, see here, this is my trading range. So this was going up and going back to the trading range, then going up again. Usually, this is something you have to learn. When it's something go out of the trading range, very good chance is to go back to retest that. And if we have blocked, it will go higher. That kind of scenario is about 2/3 of chance. The 1/3 of chance is when it's going out will be failing. So this time it's 1/3 of the chance is going lower. So when this first bounce out, you probably should not be the person to try it. But if you are very brave when this go out, you try it, then you will say the chance you're going to succeed is not high, because only 1/3 of chance will keep going higher, 2/3 of chance will going lower. It end up to be the 2/3 of chance going lower. So when it's going lower, go back to the trading range. Then you say how far this will go to touch the lower end, then decide to go higher. So it did not go exactly to the higher end. The reason it's being here, you have several upper levels here, so it ended up to use this to be the support. Then it started to go higher. So 1 day and 2 days. So yesterday broke out of my trading range again. So I already have more longs than I have. So I already, during this period of time, I already start to trim some long. Here I trimmed some more long yesterday. So in the end of the day, appear to be my trimming long. Maybe it's a bit early, but if you think about that, if I trim my long here, I will feel very good here. Then I will have more money to buy back it up. Okay, right? So now let's look at here. Now, again, if break out here, remember we say that 2/3 of chance will come back retest, or 1/3 of chance will go higher. This time end up to be the 2/3 of chance going higher here. So yesterday's trim seems to be too early, right? But today, but I already reached the percentage of the long exposure I'm comfortable with, then I'm not doing anything, because I'm going to use that 36, 38% of the long to be my base to ride with the market to go higher. So that's why I actually have gain. And when it's going to here, I have about, I say, 6,000 gains. But as of now, because the pullback, as of now, is 34. So it's 3,400. So it's about, I gave back about half of that. But here is the point I want to bring up, is that what happened now is because I have that 35 to 30, I would say 37 30% long. So I still is able to ride it if the market's going higher. But if market going lower, then once it go down to here and drop in here, I will start to trim again. And then when it drop to near here, then I will have some more. At that point, probably let's say at that point, my long exposure becomes 30% or so. Then I see it start to resume upside. Then I start to increase my exposure. So basically what I'm telling you is that with current market situation, I will be happy to have my exposure, try to keep my exposure between 30 to 40%. This is how I'm dealing with my market. I think I will do fine with that. Hopefully this is also helpful for you. Now this is daily chart. Again, let's go to the 5-minute chart. So give you some sense, because or else if you are not able to handle this like this, you're going to get very worried, right? Because if you look at the 5-minute chart, okay, it opened up going so high, you are very happy. That somewhere in here, I already say it may not be a bad idea to trim long if you feel that you are losing sleep in the past few days, especially the late sell-off of late last week, then I say that may not be a bad idea to trim some. So if you look at that, it actually dropped to here, you probably will be happy, say, oh God, I did a good thing to here. However, now it's possible we are forming the bottom, then it entirely as a possibility, the roller coaster ride will take us back up there. You have no idea. The only way you can endure this without much psychological stress is you manage your long exposure to the level you are comfortable with. Then you can ride this up and down. Like me, I can ride it up to say, okay, I have 6,000 gain. Then I'm only 3,000 gain, and possibilities of going higher. Okay, so that's what I want to give this message. This part I think is very important. I hope this will help you. Thank you. Bye.